In this video, we will have a look at one of the most exciting analyses which targets one of the major areas of potential improvement for retail traders. This analysis reveals whether a trader has improvement potential in his or her trading if the current position will be secured by adjusting the stop loss to a plus-minus zero payoff when the position is in profit to a certain level. When thinking about one of the major principles in trading to stop your loss trade early and letting your winning trade run, we have to take a look at the second part of the equation here. Letting winning trade runs always imposes the risk that the position might actually turn and run into a loss again. Therefore, many traders struggle to really make use of their positive trades as they fear to give away their profit again throughout the trade. Adjusting the stop loss in a winning trade to secure not losing money anymore with this trade or even securing some of the profit is a common strategy. However, comparing what would have happened if adjusting the stop loss to a certain level when the trade reached a specific point of profit is a difficult task and is also highly individual to the own trading strategy. Knowing the level of a winning trade when it makes sense for you to secure your trade can benefit a trader in two ways. First, it can improve the average performance of a trader by preventing scenario of a loss in a trade that has been in profit already. When not adjusting the stop loss too early, in which case many of those trades with little profit will actually be run into the stop loss and turn in profit again after the stop loss has been reached. The trade-off between adjusting the stop loss early in a trade already after a few pips or profit and having a high risk of being stopped out versus adjusting the stop loss very late only after reaching like 50 pips. However, then risking to run into quite a lot of loss trades after you had a few pips or profit already is quite difficult. The analysis output actually shows exactly this based on your past trades. What would have been your average payoff in case you would have adjusted your stop loss after a certain level of profit? The second benefit of knowing when it makes more sense for you to adjust the stop loss is that it provides the trader comfort to let their winning trade runs and really rip on the profit that can be made from the trade. Knowing you will not lose any money with this trade can give you a feeling of power, acting out of the position of strength. In a way, the trader owns the trade, not the trade owns the trader. With the background of analysis, let's look into the chart. The chart shows the different level of pips, after which you could have set your stop loss to a plus-minus zero payoff from the trade. A positive value for a bar means that you would have had a better payoff if setting the stop loss to zero at that specified point. In this case here, the trader has a positive payoff of 2 pips in the bar 15 to 20 pips. This means that the trader would have had a 2 pips better payoff on average per trade if the trader would have set the stop loss to zero once the trade reached a profit of 15 pips. We can also see that the trader would have had the same payoff for trades with more than 40 pips profit as he has today, as the bar shows nearly zero. For the bar with 5 to 10 pips, the trader would have actually had a more negative payoff of 0.8 pips per trade on average. This can be explained by the following situation. If the trader would have set the stop loss to 0 pips, once the trade reached a profit of 5 pips, the trader would have most likely been stopped out from many trades, which in the end made him or her a good profit. You can also check the output in return and also with shorter or longer time frames if required. If you're actively working on your trading strategy and want to implement stop loss adjustment at certain levels, checking your short-term time frame chart outputs is a great way to track your progress. Oftentimes we see an output in which the value for the bar increases step by step until a certain level. For example, 2 pips in the bar 10 to 15 pips, 3 pips in the bar 15 to 20 pips, and 4 pips in the bar 20 to 30 pips. In order to fully reap the benefit of the 4 additional pips per trade in the bar 20 to 30 pips, the trader should not adjust the stop loss yet at 10 or 15 pips of profit. The trader may still create better payoff as he or she has today. However, not to the extent as shown in the 20 to 30 pips bar, as he or she will be stopped out from some trades before even reaching the 20 pips profit level. Generally, adjusting your stop loss at certain profit level is a great tool to boost your performance and strengthen your confidence in the trades. It can easily be applied by traders with different level of experience. Even with the output you see here, you should still try and error with what profit level you feel comfortable to adjust, which also highly depends on your strategy. Additionally, there are further variations to this strategy. Many people set stop loss to plus 1 pip to at least feel like they still have a little profit and account for some potential commission they have to pay. Other people continuously adjusting the stop loss also to bigger profit level, thereby really securing larger shares of their profit throughout a trade. Setting your stop loss to 0 at certain profit level of a trade is a great start with this strategy, and further customization may follow. If you do not want to manually adjust your stop loss because you may not be actively following your trades all the time, there are also expert advisors which may perform this task for you, as well as price notification which you can set to be reminded if the trade reaches your specific profit level. You can also choose to activate the alert built-in on Hoc-trade. We will automatically send you a message in the community once the price of your open trade reaches a profit level, for which your output in this analysis shows a positive payoff. Please note, the alert will only be sent in case your data shows a positive payoff and you have minimum 20 trades in this category. Trading can be very demanding, and a little technical support may actually help to free your mind and focus better.